All right, morning, morning. All right, morning, morning. All right, morning, morning. All right, so this morning we'll be doing a simulation on the GBP All right, so what I'm gonna start from 20, let's do about 2020, because I want to stay in the most recent market. So I think the last simulation I did was sometime in July. Let's do about August of 2020. Let's do about August of 2020. Let's start on the second. Um, let's do a 10K account. Oh, 10K? Yeah. New York close leverage 1 to 200. All right, so the leverage is 1 to 200. All right, so what I'm gonna do now, I'm gonna load the different time frames. So the time frame that I use again in the forex market is the 5 minute, 15 minute, 30 minute, the 1 hour, the H for the daily and the weekly as well. And sometime I might look at the monthly time frame, but these are what I mainly use. All right, so what I think I need to do right here. Foreground is white, grid. Need to change the grid color to red. Remove grid. All right, so what I'm doing now is to just make changes to the template, because this is what I use. So I'm just making changes to the different, the background, the color of the candles and stuff like that, so that it can be more attractive. Now, so when you come to the chart, you want to identify your key support here, and I will be talking about support and resistance. on the higher time frame and also on the lower time frame, and the concept of risk management in the forex market and why it is important to manage risk as a trader. All right, so if you look here, we have a support in this area on the daily time frame. And we also have, another support here and support here as well. So these are our most recent support and resistance. What I'm gonna do with these, I'm gonna move these over to the H4 time frame, because sometimes you're gonna find that the daily support and resistance is in line with the H4 time frame as well. So that's very important. All right. Now, looking here on the chart, we have a nice H4 support right here. All right, and we also have another 4-hour resistance here. So this is our range that we are going to play now. All right, so we have support and we have resistance on the H4 time frame. Again, what you would want to do is to move over to the 1-hour time frame. So I'll move these over to the 1-hour time frame and also on the 30-minute just to make some adjustment. And by just looking at this on the 1-hour time frame, you can see that to actually have a resistance here on the 1-hour time frame that is in line with the daily time frame. All right, and we also have, let's use this resistance here. Then let's look at this on the 30-minute, 1 hour. So let's use these levels for the 1-hour time frame. Now, as you can see here, we have a resistance here on the 1-hour time frame, and we also have a support here. So I'm just gonna highlight the support as well. Gonna make these a bit better. Yeah, bring it about here. All right, now when I come to the chart in the morning, all right, you want to identify the trading session you're going to use. This right here is 5 p.m. EST, Eastern Standard Time. Usually I come to the chart about 13, which would be 6 a.m. in the morning. So what I'm gonna do now is to just move up to 6 a.m. because that is my trading time. So I'm just gonna go ahead and move up to that time. And the market will always move, so you don't need to sit and watch the entire move in the forex market. All right, so as you can see, pretty much here on the 1-hour time frame, we basically break structure here. So we would have had a resistance zone here, a support zone here. Sorry about that. And this would have been a gap. So this is where the Friday candle closed, and this is where the new candle open. This is a Sunday candle. So whenever you come to the chart and you see these types of gaps in the market, bear in mind that even though the broker is closed for the weekend, there is still movement in the forex market because interest rate also change over the weekend just the same. So that's very important. All right. So looking at the chart now, all right, we have a range here. So price has been in consolidation, bouncing between these levels. All right, we break out of the range. This is now 6 in the morning. The ideal play in the market is for price to pull back to form some form of resistance, to take sell, to continue to push towards the downside. All right, and even if we look on the 1 hour time frame, the H4 time frame, we are pushing bearish. So whenever you have a 4 hour resistance and it breaks support, this increases the probability for price to push down to the next significant level, which will be here. All right, so always pay attention to the higher time frame, because whenever the higher time frame is pushing in a direction, it increases the probability for the lower time frame to continue that move. All right, so what I'm gonna do now, I'm gonna start the simulation. Now, what I would like to see is for price to pull back to form some form of resistance, or even wicked into this area to continue its move down once you don't actually close back in the range over here. I think that would be a good move for sell, because the overall market structure now is bearish. Because as you can see here, we create a high, we create a low, we create a lower high because this high is lower than the previous, and we create a lower low because this low is lower than the previous, and we continue to swing down. And as you can see, candle breaks out of the current structure of the market, or the previous structure of the market, which would have been a range. So let's see if we will actually pull back to form some form of resistance to get further sell to push down to this level. And this is called break because it would have broken structure right here, and price, waiting for it now to pull back to retest this area for it to continue to push bearish. So that's what I'm looking at now. So let's see if this candle will pull back to about here where we can actually, get some potential sells. Because sometimes when you wait for the candle to close, you won't necessarily get that close. It will just pull back to the area, reject the area, and just continue to move down. So let's see if price will actually push back up to this level, retest the level, and we can get a sell for it to continue to push towards the downside. Now, take for example, if price should form the way I want it to. All right, and as I can see, we are pushing up. Now, if price forms this way and I take a sell now, and this candle close back in the range, or the next candle close back in the range, at that point you want to close 50% of your position, because when you have a candle closing back in the range, it simply means that price, there is a possibility that price might push all the way back up to the top of the resistance in the range. All right, so you want to manage risk. So when you talk about risk management in the Forex market, we're talking about a risk to reward ratio, and how to identify when a trade is no longer valid and to cut your losses short. Very important. And once you understand this and you use it in the Forex market, you will gradually see profitability. So what I'm gonna do now, this account is $1,000. Let's say we are risking about 2% of the account, thereabout. All right. Our overall stop loss, let's do about 12 pips and set our take profit for 30 pips. You know, so we're basically using almost a 3 to 1 risk to reward ratio in this case. So take, for example, I take a sell now. So take, for example, I take a sell now. All right, if this candle start to close back inside the range, you know, this increase the probability that the price will continue to range and this entire move would have been a fake out. All right, so let's see if price will actually respect the level and continue to push down, seeing that the ideal play is break and retest. However, this is a bit risky because the most important thing for us to actually do is to wait on the candle to close and form some form of resistance. But at the same time, you still have to bear in mind that while you're waiting, you can actually miss the play down. And these are things I would have seen in the FX market previously. So let's see if we will continue to push up or if we will respect the area and push back down. All right, so as you can see, we rejected the area right here. All right, so what I'm gonna do now, I'm gonna measure to see how much pips in profit we are at this moment. So at this point, we are 15 pips in profit. All right, so what I'm gonna do now, I'm gonna move my stop to entry. All right. So move stop to entry. So this trade is now risk-free. So when I talk about moving stop to entry, guys, it simply means that you're moving your stop loss to your entry point. So the trade is now risk-free. So even if this candle pull back and hit right here where I enter the trade, I wouldn't be losing any money in this case. So this is now considered to be risk-free. What I'm also going to do, I'm gonna make adjustment to our overall take profit because when we are in a downtrend, guys, when we are in a downtrend in the forex market and price create a new low, which should have been this low. Once we pull back and respect the structural breakout of, there's a 80% chance that the market will continue to push towards the downside to retest that low. So I'm just gonna move our overall take profit so that, you know, let's zoom out and see. Yeah, so let's put our overall take profit at 137,527. But if price should continue down to this low, I'm going to secure at least 50% of the position and leave the next 50 to run. All right, and as you can see here now, we are up 2.4%. So we are risking 2% and we are now up 2.4%. So let's see if price will actually continue to push towards our overall take profit. And this is based on the break and retest strategy. We break structure, we are now pulling back to retest the area to continue the bearish move. All right, and again, this is the ideal play in the forex market. It is known as break and retest. The reason why I got in the sell here, I know that sometime when you wait on candle to actually, you know, close in the area, you might miss the play. But this is a bit risky, but the more safer play would be to wait for price to form resistance, create a top wick, and as it starts to break the low, you take the sell for the market to continue to push bearish. All right, and if this was a regular day of trading for me, I would have secured some position at least 10 to 15 pips. But you know, just to see if the trade will continue to push in our direction, I'm going to leave the entire position to run and actually see. So let's see how it goes, if we will continue to push down or if the market will actually pull back to do another retest and, you know, we might get stopped out. So let's see how it goes. So if this candle starts to break its high for a second time, it increases the probability for us to get stopped out. And if it breaks its own low, then we might continue to push down. But the good thing again is that the trade is risk-free. And it is very important for me because, I always get 10 to 15 or 20 pips in the Forex market. And then when I get that, you know, most time the market gonna pull back and stop you out. As I can see here, this candle is known as a doji candle. All right. And a doji candle is an indecisive candle. So there is no clear directional bias. So if this candle can't respect the high, we might continue to push down. But if it breaks the high, it will increase the probability for us to get stopped out. But let's see how it will play out. Looking at it on the 1 hour time frame. So if we actually break, yeah, so we're gonna get stopped out. All right, so we got stopped out. Let's look at it on the 30-minute time frame. And as you can see, we close back inside the range. All right, this is why it is important for person to always secure profit at 10 to 15 pips, because you will always get 10 to 15 pips in the Forex market. So whenever you're trying to hold a trade for 30, 40, 50 pip, just bear in mind that the probability is there for you to get 10 pip, and after you get that 10, 15 pip, the probability is also there for you to get stopped out just the same. So I always advise person to secure some position. But let's wait and see if this candle will actually close back below this area and give us that confirmation we need to take further sells. But at this point in the range, there are no trade. All right. And, we were risking $200 and we didn't lose any money in that case. And this is risk management, because you move up in profit, always move your stop loss to entry. At least when you hit 10 pips in the Forex market, move your stop loss to entry so that your trade will be risk free. Yes, so I think once this flip, we will continue to push up. So I think for buys, we will definitely need price to break above here for further buys. What I'm gonna do, I think I'm gonna remove this. See if we'll actually get that close back below the area. Yes, so we didn't got the close, so there are still no cells. All right, there are still no cells. So let's look at the time. So this is now 9 a.m. So let's see. Yeah, we definitely need something to break and close below here for further continuation. Once we can actually get that, that increase the probability. And also, if we start to break these wicks, we can actually continue to drive down. Do you want to risk it? Because I would have seen this play multiple times in the Forex market. Let's risk 1% of the account for a sell. All right, what I'm gonna do, I'm gonna keep stop above this candle right here, the current candle. So I'm gonna modify the stop loss. So in this case, what I'm gonna do, I'm gonna leave the entire position to run. But take for example, if this candle close back inside the range, I'm gonna close 50% of the position in managing risk. Very important. But I am okay with the entire position getting stopped out. So let's see if we will continue to push down or we are going to pull back inside the range. Looking at it on the 1 hour time frame, we came up, we created a high, and we are now pushing down to break the low for potential downside. So let's see if the market will continue to push in that fashion or if it will pull back and we will get stopped out. Because the overall market structure is bearish, but let's see. So as I can see, the 15-minute candle close back in the range. Now, whenever you have a 15-minute candle closing inside the range, this increases the probability for you to actually get stopped out. All right, so again, in managing risk, what I'm going to do now, I'm going to close 50% of the position. Just to manage risk on this trade. So if price should continue to push down, we will make back that 50% to close, but if we get stopped out, we would have managed risk and reduce our overall loss on this trade. Yeah, so we're probably gonna get stopped out. All right, so we got stopped out on this trade. All right, now I'm gonna look back at something right here. Yeah, so overall we're risking about 80 and 80. That's at 160. We're risking 160 and right here we lost 130. So we basically save back $30 in this trade in managing risk. That's the concept of risk management in the Forex market. All right. I could have secured a $200 in, but I'm just explaining to you guys the importance of securing profits at 10 to 15 pips. You will always get that in the Forex market. So what I'm doing now, I'm just waiting to see if we can actually get a candle to close below our resistance right here to actually take a sell for price to continue to push bearish. Now the 4 hour farm support. So we definitely need a candle to actually break below this level right here. We definitely need a candle to break below this level. Because as you can see, the 4 hour candle rejected the area and we now form support. So this increases the probability for price to push bullish. This is our most recent H4 resistance. And looking at this candle right now, this candle failed to break the low of the previous. This candle failed to break the low of the previous. This candle failed to break the low of the previous. So in this case, we are creating higher lows. All right, we are creating higher lows. Because this low is higher than the previous. So that's what I mean by higher lows in the Forex market. So I'm just actually waiting to see if price will break and close below structure or above. Much more minute leave. Think this might continue to push. All right. So we actually got a candle to close below structure. All right. So what I'm waiting for now, once this candle start to break the low here, I'm gonna go with a sell. But I need a top wick first, and I need the candle to actually pull back to actually, break the low. So if I don't get that, then I can't take a sell. Because I love when my candles give a top wick first and break the low. As I can see, we close back in the range. So at this time, GJ is just playing around. So there are no buys, no sells. Looking at the session, this might be it for the day. Yeah, so pretty much no trade. No trade is here now because this is leading up to the New Year close. So what I'm gonna do, I'm gonna move on to the next session. And sometime in the market, you're gonna get plays like these in the market. You're gonna always get plays like these where the market is in a range and you're not gonna get any clear structure in the Forex market. So as I go along, I just make adjustment to my support and resistance in the market. All right. That's the most important thing. As you go along, you can just make adjustment. But if again, I'm still waiting for price to close below here. Still need candle to actually close below this level. So as you can see, we got a candle to close below the level. All right. This is the close of the 1 hour candle. We're still not below this support level as yet. So this is still a bit risky, but I think if we start to break the low right here, we can actually continue to push bearish. So let's see if we will start to break down. We need price to break here. I'm just still waiting to see if we'll start to break below 138. And as I can see, we now break the low of the previous candle. So at this point, what I'm gonna do, I'm gonna enter a sell. I'm gonna leave the entire position to run. Alright, but once you don't close back in this support area, then we are still valid for the downside. But if price starts to break above, then it will increase the probability for us to get stopped out. And as you can see, this 15-minute candle came up and respect the high of the previous and start to break the low. So this increased the probability for the market to actually continue to push price towards the downside. So what I'm gonna do, I'm gonna modify our take profit. So this is our overall take profit. All right. So what I'm gonna do, I'm gonna leave the entire 1% to continue to run. You know, once you don't close back inside the range, I'm gonna leave it to run to see if we will actually continue to push towards the downside. Seeing that, you know, we break and close below this level, though we have a minor support here, you know, I just want to see if we'll continue to push bearish. Because it makes perfect sense. We have been in a range and there was no clear move apart from this one right here. And this was in the London session and we're only focusing on the New York session. And so we need price to push down to about 10 pips. Alright, so let's see if we'll continue to push. Alright, so I think this should be, let's see if we have actually, so this was 10 pip. So what I'm gonna do, let's leave the entire position to run to see, based on trying to day trade this move all the way back down to here. Let's see if the market will actually continue to push. You know, but at the real life situation at this point, I would move stop to entry and at least secure some position. And as you can see, the 1 hour is now below the level, clean below the level of 30 minutes. So, you know, again, this increases the probability for us to continue to push to the downside. So if this candle should pull back into the range, this is known as a fake out. And a fake out is when a candle breaks, close below the range, and then it pulls back and close inside the range. So let's see if we can get that nice push towards the downside. Let's look at this on the 1 hour time frame. So we are still below this 1 hour support here and also the 30-minute support. So I think we still can get that push towards the downside. So what I'm gonna do here, I'm gonna trust the H1 time frame, because in the forex market, the higher the time frame, the stronger the confirmation will be. So once I don't get, like, you know, a 30-minute candle closing above this level, I might just leave the entire position to continue to run. But if price should pull back into the range again, this is a classic fake out. So as you can see, we break the low, so we should continue to push all the way down. All right, let's check our pip move again from entry. This is 17 pips. So what I'm gonna do now, I'm gonna move my stop to entry. So this trade is now risk-free. So again, we are trying to do a day trade. We are trying to swing price down to this area where you can secure 50% and leave the rest to run. All right, so as you can see, we are back in profit. We are at right now with equity, we are down 0.23% on the account. All right, and we are trying to day trade this idea. So let's see if we'll continue to push down or if price will actually pulls back to stop us out. As I can see, we are rejecting the area, but just gonna leave it to see if we will continue to push down. Alright, as I can see, this candle is now below the low. What I'm gonna do, I'm gonna watch it on the 15-minute time frame, and I'm gonna identify our first potential take profit based on this day trading idea. So what I'm gonna do now, I'm gonna modify my stop loss. So I'm gonna bring my stop loss above this 15-minute candle, because seeing that we are up probably about 20 pips, 22 pips, you know, you want to put yourself in a position where you can actually secure some profit. Alright, so what I'm gonna do now, I'm gonna bring my stop here. Let's keep it above the current candle, because if we should continue to push bearish, there is no need for this candle to actually pull back to break its own high. Alright, and we are now up with equity 0.43%. So let's see if we'll continue to push. So even if this pulls back and stop us out, we would still be in profit for the day just the same. Alright, and as you can see now, we're up 1%. We are running $235 and we're risking only 1% of the account. So I might just close some percentage at this point. So what I'm gonna do now, I'm gonna close partial. Let's close 70% of our position. Leave about $70 to continue to run to our overall take profit. The 30-minute are still open. 1 hour is still open. H4 is pushing bearish just the same. So I think we can actually top this wick. And then if price continue to push down, we can hit our overall take profit at 137,514. So let's see how that will go. The hardest thing with this trading strategy, guys, is patience. That's the hardest thing. Once you're patient in the Forex market, you can capitalize on these types of setup. You might lose a trade here and there, but again, risk management comes into play. All right. Once you have risk management under control, you are going to be profitable in the Forex market. And as you can see, we went up to 2%, got stopped out at break even. We came back and lost 1%, and we are now back up 1.1% with equity. All right, so we are back in profit. But if I had secured that 2%, I would have been up 3% right now. No, 4%, because with what I just closed on this current running position, that's over $200 plus the previous $200. So I would have been up 4%. So it is always important to secure some position at anywhere between 10 to 20 pips. If you're not going to secure a position at 10 pips, at least move your stop loss to break even. So if this candle starts to break the high of the previous, then I might just close the entire position. Because as I can see, we might be creating a range here if price starts to break the high or to farm support. All right, let's see if we're gonna farm support. If it farms support, I might just close the entire position. Yes, I'm gonna close the entire position because, you know, seeing that they're farming support and we're breaking the high, price might just pull back to stop us out. And in doing that, I also know the possibility is there for the market to continue to push price down. But again, I just feel more comfortable securing the entire position at this point. And as I can see, price is now pushing bullish. And as I can see, we farm support not only on the 30-minute time frame, but also on the 1 hour time frame. All right, so when I say the market is farming H1 support, this is a very strong support. And this increased the probability for the market to actually push price bullish to at least retest this area if we are going to continue the bearish move down. Alright, so what would have happened here if we didn't secure position would have gotten stopped out. Alright, would have gotten stopped out in this trade. So again, it is always important to secure some position at 10 to 15 pips. Alright, so as I can see, price is currently pulling back in the range. So what I'm going to do now, I'm just going to move on to the next session in the market. I'm going to move on to the next session. So I don't care about what want to take place during the London session. I am only focusing on the New York session. Alright, that is what I am focusing on the New York session. So I think for buys, we need price to break and close above this level. Alright, so once you can get a candle to break and close above this level, then we can actually take a buy to get this wick fill. And if momentum is in the market, we can continue all the way up to 139.363. So let's see how that will actually play out. So as you can see, we got a close above resistance. All right. So what I'm waiting for now is for this new 30-minute candle to actually create a lower wick. And as it starts to break the high, I'm gonna take a buy. And the idea is for price to actually fill this wick we have to the left right here, and then hopefully with momentum we can go all the way up to 139.363. So what I'm gonna do, I'm gonna highlight our first take profit. But if we don't get a lower wick and price starts to break, clean above this level, I might just take the buy, because sometime when there is volume in the market, you won't necessarily get that lower wick, but if you see price starts to break the high, then that is just a confirmation for us to continue to push up. So we got a nice little wick right here. So I think if we start to actually break up, we might push, but if not, there is no trade. And this is why I love for price to create a lower wick and then breaks the high. That would be the confirmation for us to continue up. So take, for example, if we are taking a buy here, then we would have gotten stopped out because our stop would have been below the previous candle. And as I can see, the current candle breaks the low of the previous candle. So this would have been, a stopped out. So just let's wait for that confirmation. There is still no confirmation as yet. So very important. Always wait for price to give you a lower wick, and when it breaks the high, that's the confirmation to take the buy. All right, now looking at this, we are at about 835 right now. So if this candle starts to break, say about 139 flat, I'm gonna take a buy if we start to break 139 flat. But if not, still there is no trade. I'm looking at this range, and this is a 36 pip range. Let's make this a bit better. So I think we might be able to get some sells if we start to break below this area as well. This is a big enough range. So let's just wait and see. Definitely need a candle to close. Are we going to miss the play? Yeah, so what I would like to see is for this candle to pull back and retest this level to actually take a sell. Let's measure this and see 14 pips stop. Looking at this on the 15-minute, I'm gonna risk 1%. But what I'm gonna do, I'm gonna keep the stop above the previous 15-minute candle. Yeah, I'm gonna keep the stop above the previous, because the thing is we are in high volume session right now. We break and close below support. Why did price close below support? All right, so we are risking $174 to make $414. So that over 2-to-1 risk to reward ratio. So what I'm gonna do, I'm gonna leave the entire position to run. All right, so once you don't get a candle to close back above this level, I am okay with that. But if this candle starts to, break above or close above, I might just close 50% of the position in managing risk. And I think this could be our first take profit. So let's see if price will continue to push down. And this would have been about 10 pips. So we are targeting about 20 pips. So once you don't get candles to break and close above here, I think we might push down. So let's just, leave the trade to actually see. Because sometimes the trade need a bit of breathing space, so it can continue to move. And as I say, we close bearish again. So this is a good sign. So if this candle starts to break the low, that's another confirmation. But if it starts to break the high, then I think I might close 50% because if it can respect the low and break the high, it increases the probability for the market to actually push price against us. So let's see if we will respect the high and break the low to continue the move down. And as you can see, we break the low and we are now up $129. So at this point, what I'm going to do, I'm going to move stop to break even. Again, this is called price action trading in the Forex market. So I'm going to move my stop loss, which is this line here, to my entry to make the trade risk free. So at this point, if the trade pull back and stop us out, we're not going to lose any money. And I think it would be wise to also secure some position as well. So let's close 50% and just leave 50 to run to see if we'll actually push all the way down to our overall take profit. As I can see, we are pushing down to a support, and even though we are in high volume session, the probability is there for price to bounce from support and also to break through support. All right, and as I can see, we reject the area, we got stopped out. Now the good thing about this is that we would have secured some position. All right, so this is still not a losing trade because we would have secured some position in this trade, hence making the trade profitable. So if we go back and look at the history, all right, would have secured. So went up about 130 something, I was secure 50% of that. All right, and the next half of the position got stopped out at break even, so we didn't lose any money in this trade. All right, to manage risk on this trade, we didn't secure any profit on the first trade, so we got stopped out at break even. Won this trade and we came back and won this trade. All right, so that's a profitable trade. What I am also looking at, this could just be a break and retest for price to continue down. All right, so 0.5. So let's do about 0.5% for a sell, risking about 10 pips. And this is based on the break and retest strategy, looking at this on the 15-minute time frame. All right, so we're risking about $60 thereabout. So let's see if price will actually continue to push towards the downside. All right, so seeing that it started to break the high here, it increased the probability for us to get stopped out. So I'm just gonna leave the position to run to see if we'll actually push down. Yeah, so this is a deeper pullback. So price is just ranging right now. Candles are printing side by side on the 15-minute time frame. Yeah, we are pulling back in the range. So we're still up 1%, so we are not in any loss overall for the entire week. Yeah, I think we should have waited for price to retest here. This would have been a better play because it would have been up. Yeah, would have been up. Yeah, 18 pips. I think we should have waited for price to retest this area right here. Yeah, because the 30-minute time frame gives stronger confirmation. Yeah, so pretty much I'm just gonna move on to the next session, seeing that this is now London close. So what I'm gonna do now, I'm just gonna do some clean analysis. Alright, so as you can see, we got this wick fill overall, and we now have a new resistance here. We have a support here. This is on the 30-minute time frame. Yes, so we have a support here. So I think for better sells, would actually need price to, break and close below this level to try and mirror some of this move back down. And this is a 28 pip range. I think I'm gonna use the zones on 30-minute time frame. So let's see how the market will actually form price. So in taking a sell, I would feel more comfortable if we get a 30-minute candle to close below this area. Buys would definitely need to get a 30 to close above resistance, and we can get a potential wick fill and with continuation. Let's see what we got to the left on the H4. Clone these over to the 30, the 1 and the 15. Yeah. So what I'm looking at now is for this candle to pull back to retest this here so I can take a sell with stop above here for price to continue down to this support area. This is what I am interested in right now. Or if it starts to break the low, I might go with it. Right, so as I can see, oh, so damn, would have missed that move. But I'm still gonna do a 1% to anticipate the market to push price down. This was pretty fast, but the idea was for, as a start to break here to actually go with it. So let's see if we will push down or if price will actually, let's modify the stop loss. Now let's try to keep it above the current or the previous candle. So let's see, because if price push up and breaks the high, the probability is there for us to pull back in the range. But the ideal sell would have been here. Yeah, that was risky. Break and retest. This is 122. And this is based on the break and retest again. Giving the same idea a second chance, but if we get a candle closing inside of the range, you just have to manage risk just the same. Looking at the session, it is now 8:30. So if this candle close inside of the range, it increases the probability for us to get stopped out. Yeah. So this was a fake out in the Forex market. All right, I think better sells would have been as we started to break the low here. So it is always good to go back and look at your trade, your trade that you took. So I think better sell would have been as we started to break the low here. All right, and would have caught 19 pips. This was a bit risky, but it is what it is. Sometimes you're gonna get lost in the FX market and you're gonna win, but you just have to manage risk. So this is considered to be a fake out, because seeing that price break and close below support and not actually pull back inside of the range, that's just a classic fake out. Wow, and just look at that rejection now. Look at that rejection. And as I can say, the bias is right, but you don't really have any control over what the market does. The bias is right, but the market just chose to do a deeper pullback and we got stopped out. So as I can see, guys, the bias was right, but we didn't have any control over this pullback. All right. So I was waiting to see if the 30-minute candle would have closed in the range, and then bam, we got stopped out, and then the market reject and continue to push towards the downside. Could have taken a sell here, but seeing that we give our buyers two chance for the day and it didn't work out, I'm just gonna call it a day and actually move on to the next trading session. And as I can see, our overall take profit would have gotten hit. So sometimes you will have these types of plays in the Forex market. You just have to manage your risk. And this market structure is pretty messy. This is pretty messy at the moment. I think the only play now would be potential sells. This would be the only play right now. Alright, so let's see if we can get a candle to break and close below here on the 30-minute time frame to see if we can continue to push bearish. Yeah, I think the only play I'm interested in now would be a sell if we can get something to close below here. Still no confirmation as yet. Can't take buy because you would be buying into all of these wicks rejection here, and we have resistance here. So I need the range to be at least 20 pips or more, and this range is just about that. This is a 21 pip range. Wow, did we miss the move? Alright, so the candle closed all the way down here. So again, let's see if market will pull back to retest the area for us to actually get a entry somewhere about here. Yes, 78 pip. So let's see if the market will actually pull back for us to get a entry. Alright, so would have missed that play basically. Yes, I would have missed that play. Alright, so in looking at this, just to show you guys something. The only option would actually be as price starts to break these wicks right here to take a sell. And going back and looking at this now, the only option would actually be, to take a sell as price starts to break the low, because again, sometimes you won't get that close below structure, but when you see price start to clear all the wicks in high volume session, it increases the probability for the market to push price down. Alright, these are plays that I would have seen in the Forex market over and over and over. So as it starts to break below here, then take for example, you make a sell. Alright, you are using roughly a 10 pip stop because this is an impulse play in the Forex market. It would have continued to push in your favor. But I didn't want it to take a sell here. I didn't want it to take a sell here because why? This would have been too far for me to actually take a sell. I would have wanted to actually catch it here. So I'm just going to close that basically. So that would have been the only other options. And as I can see, price is pushing towards the downside. Yeah, and the market just pull back. So again, you would have been up 11 pips, secure some position, move stop to entry. Very important. But the current market structure is pretty messy right now. Like, I'm not really liking this market structure because, as I can see, we don't have any large range for us to take good trades. Wow. Let's go back and look at this. So that's pure volume. That's pure volume. This low impact news, low impact news. Yeah, so this display was pure volume, basically. Yeah, so even at this point, you wouldn't be able to take a sell because, as I can see here, we have support and support, and these range are very small. This is like 10 pip and overall 16 pips. So these range are very small. So, you still wouldn't be able to take a sell. Like it retested the area, but still don't like the idea. This move was a 40 pip move, 45 pips. That was a lot of volume. Alright, now looking at this, just gonna make some adjustment to the current market structure. So we have a support here, and will form a minor resistance here. If this 30-minute candle close above here, the probability is there for us to continue to push bullish. Seeing that it would be forming support and closing above resistance. So let's wait and see. Yeah, look like we're gonna miss that play. Yeah, so we're gonna miss the play basically, but that's the idea. But as I can see, the candle did not close, it just starts to push. Yeah, it just started to move, so we didn't get the confirmation for that buy. But the idea would be for the 30-minute candle to close somewhere in this area, and we could actually take a buy for it to continue to push up. Yeah. I'm gonna do another day. I'm gonna move on to the next trading day. Alright, again, so when you come to the charts, you want to mark up your fresh zone. So looking at it on the 1 hour time frame, we have a resistance here. Price breaks and close above the resistance. We have another resistance here. This is like a 20 pip range, 19, 20 pips. So this is okay to take a small trade. So what I'm gonna do, I'm gonna bring these over to the 30-minute time frame to actually see what is going on. So on the 30-minute time frame, we are still below this minor resistance here. Alright, but on the 1 hour time frame, we close clean above the level. So take for example, if this current candle starts to break its high for a second time, we might risk a small percent. So let's see. Yeah, let's wait and see. Wow. Alright, so that was pretty fast. That was pretty fast. But the idea would be to actually get in the buy as it starts to break its high. Seeing that, could this be a possible rejection? It's like 9 pip, 9 pip, 8 pip. Let's do a 0.5%, seeing that it is so risky. Let's do a 0.5%. Let's say if this closes in the range, then you know the probability is there for us to get stopped out. I seeing that this 30-minute candle close back in the range. Looking at it on the 1 hour time frame, you know, we are still above this resistance on the 1 hour time frame. So we have roughly 29 minutes for this H1 candle to close. Seeing that it's 0.5%, I might just leave it to see if we'll continue to push. Yeah. So again, risky. So your risk only 0.5%. So basically we are down, you know, 1.5%, which is not a big deal. So there is no rush or any worries. Alright, again, still gonna wait for a candle to break and close above this level. Still need a break and close above here. Yeah. For sells, we have this support down here. If we break this support, this would be our area of concern right here. This is 12 pip and we have a 20 pip move down. So let's see if price will actually break and close below the level. Let's see. Da-da-da, da-da, da-da. Looking at it on the 15-minute time frame. 15-minute close below the level. 15-minute candle is now below this level right here. Should we risk it? Seeing that we break and close below. I think if we start to break the low here, this will increase the probability for the market to push price down. Even though the 15-minute is weak, gives weak confirmation, it's looking pretty good because we close clean below the support on the 15-minute time frame. So it makes sense for us to continue to push down. 1.5. So if this 15-minute candle close back in the range, or if it starts to break the body of the candle here, I'm going to close 50% of the position in managing risk. Reach price, so let's 138 408. Because I want the market to continue to push price down. Alright, and if we are going down, we don't need to close back in the range. Alright, so this is now the close of the 30-minute candle. So this is now the close of the 30-minute candle will create a top wick. So once we break the low here, you know, this will increase the probability for us to continue to push down. So let's see if we will actually get that. So I'm just going to look at it on the 15-minute time frame. Alright, so at this point we are pretty much up. We are up 11 pips. So what I'm going to do, I'm going to move stop to entry. Charts. Trades. Break even. Close partial. Let's close about 80%. Close most of the position. So with equity and everything, we are down 0.30%. So whenever you even if you take multiple loss, guy, the most important thing in the forex market is risk management. Once you manage risk, there is no stress whatsoever. As I can see, we got stopped out. So we are only down 0.5% of the account. Alright, so this trade that I took a while ago basically made 1% on that account. And as I can see, you know, we secure position, move stop to entry, and we got stopped out. So again, you will always get that 10 pip move in the forex market. you're gonna always get that 10 pip move. And this could just be a deeper retest for the market to continue push price down. So I highlight the area of concern which should have been here. We secure profit here, and then what happened? The market rejected the area. So you can see we're still pushing bearish. So we might hit full TP. We might push all the way down to this support right here. Is this a break and retest? You know, this just feels like a break and retest of the current market structure, in all honesty. Yeah, this looks like a break and retest because as I can see, price came up 1, 2, 3 times and failed to break and close back in the range. You know, but the thing with the break and retest, it is always good to wait on candle closure. You know, do you want to risk it for the biscuit? Break and retest. Yeah, I mean, this is the ideal play. Again, sometimes when you wait on the candle to close, you might actually, miss the play. But if this candle starts to break above, 138, 425, I might just close 50% of the position and just call it a week. So even if you're down 1 or 2% for the week, that's good risk management. All right, so you don't need to worry yourself or stress yourself or anything like that. Because you might not get a profitable week all the time, but again, you just have to manage risk. If we start to break above there. So as you can see, looking at this now, the 30-minute candle close back in the range. So what I'm gonna do, guys, let's look at the 1 hour time frame. Yeah, and the 1 hour time frame forms support. All right, so what I'm gonna do, I think I'm gonna exit this trade based on the current structure. I don't like the way our price is forming, so I'm gonna close this trade because the reason being is that we have a 30-minute candle close back above support, but we got the opportunity to either reduce risk or to get out of the trade. But by doing this, I am accepting the fact that the market can actually continue to push price down, but I feel more comfortable exiting this trade because price breaks and close back above support, and whenever this happens, it increased the probability for the market to push price back up to the next resistance, which would have been here. All right, but I'm still accepting the fact that if we push down, it is what it is. I just no longer feel comfortable about this trade, so I just get out the trade. So if I am going to get in a sell, I would need this 30-minute candle to close below support. So this is the confirmation. So what I would want now is to get a top wick, and as price starts to flip bearish for the second time, I can actually go ahead and enter a sell and anticipate the volume to push price down in the NY open. So seeing that we break, we pull back to retest the hero, close inside the range, we close outside of the range. This candle failed to break the high and break the low, and we are now waiting on a top wick. You know, we got a wick here, but I'm not really convinced by this. I need like a 3 to 4 pips wick there about. So let's look if we have any news. No news. You know, measure the range to see how much pips we are playing with. 13 with continuation. Yes, so what I'm gonna do now, I'm gonna look enter a sell. We are risking 12 pips. But take for example, if price starts to break here, I'm gonna close 50% of the position, because if this candle can't respect the high of the previous and the next candle right here, which should have been the third candle, then at that point you know that the probability is there to get stopped out. So you just have to manage risk. So I'm gonna close 50%, and at the same time, I am accepting the fact that I am willing to lose 1% of the account. All right, so let's see how this will go. Again, if it start to break up, I'm gonna close 50%. But once it start to break the low here, then you know the probability is there for price to push down to retest the low. And whenever you see these plays in the Forex market, there's a 80% chance that price will continue to push down to retest the low. But at the same time, you just have to bear in mind that you don't have any control over the Forex market, and you have to manage your risk as you go along. So my aim in the market is to always keep my losses small. Learn to keep your losses small in the Forex game. You know, so I'm giving the trade a second chance. And if price farm support here, then I might just, you know, close 50%, seeing that we are farming support at support. If it close back in the range, then, you know, I might just close 50% or get out of the. So at this point, I'm gonna close 50% of the position. Yeah. I'm gonna close it, because if price can't respect the high of the previous candles, then it increases the probability for us to actually get stopped out. So let's leave it to see if we will actually continue to push down, or if we're gonna get stopped out. So I think this trading week is a pretty difficult trading week, basically. You know, this is a very difficult. So we got stopped out. So overall, we're risking. Let's look at the risk factor. Let's look at the risk factor. So history. So overall, we're risking Yeah, we're risking about 112 people, 100, about $120 thereabout. 115 to $120. And we only lost, that's 50, 60, 70. That's 84. That's about 83 to $84 we lost. So there about, we save ourselves roughly, you know, about $30. About 30 to $40 there about to save ourselves just by managing the risk. You know, so when I'm trading, I'm not afraid to cut losses short. Because I know that whenever I catch the good trades, they are going to run and run good, and I'm gonna make back those losses just like that. So as I can see here, guys, we are down 1.3%. We are not over risking. All right, so we are keeping losses small, and we are just focusing on two particular setup: break and retest, and when candle actually breaks outside of, the market structure, that gives us the confirmation to take a buy or a sell. So I think this was one of the most difficult week in this time period. Yeah, looking at the session now, 9 o'clock. Yes, so I don't like the current market structure. Maybe if price close above here, we can get a buy, but I'm just not liking the current market structure, to be honest. Yes, so as I can see, price break and close above here. So the only option would be for price to pull back to retest this area to actually, maybe we can take a buy for price to continue to push up. This is the only other play based on what I'm looking at on the 30-minute time frame. This is risky because we have resistance here and resistance up here. But there's a reason why we break above this level to push up to the next level. This is risky, but take a buy. So if this candle starts to break here, then it makes sense to get out of the trade again. As I said, this is like a tough trading week. So you just have to manage risk, and once you manage risk and keep your losses small, it will increase your confidence over time as it relates to risk management. Because when you can risk 1% of your account and you lose like 0.5%, 0.6% or less, that I just feel good about that. Because I am losing less than what I intended to. Because, entering a trade, I am accepting the fact that I can get stopped out. Yes, I think this week is a pretty tough week in the market, in all honesty. So I think if we start to break the low, yeah. Yes, I think if we start to break here, it makes sense to close 50% of the position. Again, this is called risk management. All right. So even though the probability is there for us to get stopped out, the probability is there for the market to actually push price up just the same. But you just have to manage risk. You just have to manage risk in the Forex market. Nothing beats risk management. So even if you're down 1%, 2%, 3%, 4%, manage risk. Don't over risk, don't over trade. Yes, I think we're gonna get stopped out. It's a pretty tough week, so we got stopped out. Alright, so price is just in a range basically. Price is just ranging. So we break and close above. We are now going to close back in the range. So this is a fake out. So I'm not really liking this current market structure very much. Not really liking this market structure. I'm gonna move on to the next session to see how the market actually prints price. I say, see, the bias was right, but the market was just in a range. But the bias was right for the market to push towards the upside. So what I'm gonna do now, guys, I will be doing a clean analysis. All right, we have a support area here. We have resistance. Let's clone these over to the 30-minute time frame. Our overall target for this trade. So we take a buy here, doing like a 14 pip stop, 16 pip up to this resistance with continuation. We can actually get a wick fill at 24. So I'm not gonna change my trading strategy because of the few loss in the market. Losses are inevitable, but my main aim is to keep my losses small. That's what I try to do. So by just looking at this current market structure, right now, sell would be risky below here because this is like a 15 pip range. But seeing that to break and close above the level on the 30-minute time frame. All right. And if we should actually take a buy, this is how I'm going to manage risk again. This is how I'm going to manage risk again. We are above resistance. This can respect the low. Even though we don't get a lower wick, I'm still gonna go with the buy with overall maybe a 14 pip stop. And I am going to take a buy. So if this candle starts to break the low of the previous candle, I'm gonna close 50% of the position. I'm gonna close 50% of the position. This is how I trade the Forex market. Because if price is going up, you need to respect the low of the previous and break the high and continue the bullish move. So if it pulls back to break the low, I'm gonna close 50%. So you have your strategy that you use in the Forex market. Just stick to your strategy. It doesn't make any sense. You're gonna say, oh, you have a bad week and you want to change strategy or try something new. I know that this strategy is very effective. The most important thing with using this strategy is just to manage risk. All right. And seeing that we are up about 5 pip. Yes, so if this price should actually pulls back to entry, I might just close 50% in managing risk because I need price to continue to push bullish. Because you want to minimize drawdown. So if it pulls back to my entry, I'm gonna close 50%. So just have to manage the trade. All right, and this is also the close of the 15-minute candle. So what I'm gonna do now, I'm gonna make some adjustment, all right? Because this is looking pretty good. Because even on the 15-minute time frame, we are above this 15-minute resistance. So here what I'm gonna do, guys. Like 4 pip. So if this candle breaks the low here, I'm gonna close 50%. And the reason why I move it from entry to the low because we are now above this minor 15-minute resistance. And if we look at the session, all right, we are in the pre-New York session at about 6:15 there about, so there is some sort of volume in the market at this time. So this is the reason why. I think on the 15 I can identify my potential take profit. Yeah. Yes, I'm just gonna leave the trade to go. If it pulls back to break the low, manage risk. If it continues to push towards the upside, that would be pretty good. But we need minimum 10 pip to actually secure some position and leave the rest to run. Yeah, so we need it to about 0.50. 0.50. This is like 10 pips. This is like 10 pips. Alright. Now, usually at about 10 pips, again, secure some position, move stop loss to entry. So yeah, 10 pips. So what I'm gonna do, I'm just gonna move stop to entry and just leave the position to run because I want to make the trade risk-free at 10 pip. So even if you're not going to secure any position, at least move your stop loss to entry and just leave the position. And at the same time, you're accepting the fact that you might get stopped out at break even, all right? So that's the thing about break even when you move stop to entry. So if we break the low again, we are going to get stopped out. If we break the low again, we are going to get stopped out. All right, so I think we're going to get stopped out. And seeing that to form resistance here. Let's see if we can break the high and push. Because whenever price form resistance, it simply means that the market can push against you. But we're up $119. I think it would be a good idea to actually, seeing that to form resistance, I'm going to close 50% of the position. If we continue to push, that would be great. But if we get stopped out, would have secured some position. I just don't like the fact that this candle open, we didn't get a lower wick, and we start to push up. So it might pull back down to give us that lower wick. Yes, so we got stopped out. So good thing, we secured some position. Yeah, this we're not getting that big push in the market right now. The market is just playing around, so you just have to keep those losses small. You just have to keep the losses small. And look at that. Price pull all the way back down to here. Price pull all the way back down to here and came all the way back up. Sometimes you just have to question those plays in the forex market. But I think we can't take a buy because we have this level right here to the left. Really can't take a buy at this moment because we are below this resistance. Let's look at the 1 hour time frame. So let's look on the H4. Yes, I'm just gonna clone these over to the 1 hour, 15 and the 30. Yes, so for buys, we might need price above this level. We might need a close above here. We're just not getting that big push. You know, the market is just playing around. So whenever the market structure is, you're not getting the best of play, you just have to keep those losses small. So the bias was right, but I just never like the idea of price pulling back this deep. You know, this just didn't make any sense. And as I can see, we are rejecting the area. Yes, so definitely need something to close above. Let's look at the session time. 8:30. Farm support here. 14 pps. So this is pretty messy. And I'm just not liking what I'm seeing at the moment. But if price starts to break the high here, then it makes sense for us to continue to push up. Alright, looking at this now, guys. We had support here. We break and close below support. This candle did not break the high of the previous. This candle did not break the high of the previous. We wicked all the way outside of the range and close back inside of the range. The only problem with taking a sell now is that this is like 11 pips. And if we can push all the way down, we can get a 18 pip move. Alright. So take, for example, say we take a sell. We take a sell here. In managing risk, if we start to break the high, it makes sense to reduce our risk in the trade if we start to breaks the high. Or at least if it closes outside of the range, it makes sense to, reduce the risk. So let's see how it will actually go. I've seen that will close below this support area. Risky, but we need this candle to respect the high of the previous, flips bearish, and continue to push towards the downside. So if price starts to break 139, 120. 39, 120. Then I'm gonna close 50% of the position. Alright, so I'm gonna close 50% right here. Yeah. So price is just pretty much playing around at this moment. Price is just playing around at this moment. Wow. There are actually no confirmation for that price. Yeah. It's a nice move. It's like 34 pip. I think the only option would be as price start to breaks above these level. Yeah, it makes sense. Makes perfect sense. Can wait for a retest. Say if we can get some form of support here, price can actually continue to push back up. Definitely need a support. Need a 30-minute support above this level for price to continue to push back up. Yes, so just gonna make some adjustment here. Leading up to the London close. So if we break and close below. So this is just a tough. It's gonna move on to the next session because this is about 12 leading up to 12. Just gonna remove these lines. I know we just have to make adjustment to the zone. We have resistance. We are forming support. We have a minor support right here. Just measure this range to see exactly how big. This is like a 13 pip range, but this is minor. So I mean, if we farm support here and price break support, it increases the probability for us to continue to push down. But if we start to break above here, there is no actual data to the left, unless I'm gonna look at the daily time frame to actually see what is going on. And looking at it from the daily time frame, we have a daily support at 141. But that is very far away, so let's focus on the smaller time frame. And what I will also use is all numbers. So like the 39.500, the 39.600, those would be the target because banks love to play around with those numbers. Yes, so I think this is 4, 5, 6. Yeah. So 12 pip. Yeah, so let's see if we will actually break support or break above resistance. Because if we close above here, it makes sense for the market to continue to push up. All right, so as I can see, we break below this level. And looking at it on the 15-minute time frame, You know, the only concern that I am having right here on the 15-minute time frame is that this candle have no lower wick, you know, but let's see, let's risk about 1% and see. Let's risk about, say, if this close back in the range, you just have to manage risk again. You know, that's the whole idea. If it close back in the range, I'm gonna close 50% of the position. No, so let's slow this down a bit. Yes, so as you can see, this candle close in the range. The 1 hour candle also form support. So, you know, just have to knock off 50%. Close partial, close 50%. So I'm closing about $30 there about. Or $29, $30. Just gonna leave the position to run to see if we will actually continue to push bearish or if we're gonna get stopped out. Da 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 da. As I can see, the market is now pushing price in our direction. So if this close below here, then you know we might break through this minor support and continue down. It's like 10, 11 pips. Yes, I think at this point it will be safe to move stop to entry. You know, so move stop loss to entry and let's see if price will continue to push towards our overall take profit. But if it close back above here, I might just close the position, or if it pull ups to break its own high for a second time, I might just close the position. You know, because we are at a minor support. Yeah, so don't like the way. I think we might get stopped up. I'm just gonna leave it and see. I'm just gonna leave the entire position to see if we'll actually push down. Yeah, and as I can see, we're pushing down. Let's see how much pip is this. So again, we'll manage risk, guys. This is 19 pips. So I'm gonna secure this full position. We manage risk, and the reason why price close against us back above this 15-minute support. We close 50%, we made back that 50% and actually, you know, make some profit on that as well. So it's still not a bad trade, just to say. You just have to manage risk in the Forex market and just don't over trade and don't over risk. Alright, I'm just not really liking this current market structure right now. And as I can see, we are rejecting the zone. You can see we're still close below this support area. you know, but I think I'm gonna move on to the next trading day. Seeing that the market structure is not the best at the moment, I'm just gonna move on to the next trading day to see what we can actually get. Wow, just look at that. Look at that move. See, I see why it is important to always secure position at 10 to 15 pips, guys. Just imagine you're trying to swing this trade. Look at this. You know, would have gotten stopped out here. And take, for example, you're still holding, you would have went down all the way to 30 pip and bam, price pull back to negative 27 pips. Damn, like this market is really pushing up. The only thing is that, you know, it's London close and we break and close above the level, and there is pretty much nowhere to put our stop loss if we should actually take a buy. So I'm just gonna leave this alone and actually move on to the next New York session. You know, because we took one trade for the day and the trade is profitable, so I'm not gonna risk anything else for the day. As you can see, we close back inside the range. Price ranging. Wow. So I think we would have missed this move. So this would have been 6, and we would have missed the move from, no, would have missed the move from 5. But that's okay. It is what it is. Don't worry about that. Our time actually 13, which is 6 in the morning. Now you come to the candle at 6. Again, you want to identify your zones. So looking at this right now, guys, we have a support here. All right, we have a resistance here. This is the low of the range we are currently in. This entire area is consolidation. I'm just gonna change this color. This entire area right here is consolidation. All right, price breaks and close above your level. This increases the probability for the market to push price up to the next significant level. Looking at this on the daily time frame, we are looking at about, you know, 141, 183. That's a pretty far away to go, but you know, that's 153 pips. So we're not gonna get this entire move. So again, our target might just be 1 hour time frame. Let's zoom in and see which number we can actually move to. So let's look at the 141 flat. 140 flat. It's about 140. The thing is, you know, it would if you had came to the chart early and you get this close above, you could have went ahead with it. All right, looking at this on the 15-minute, let's clone these over to the 15-minute. I mean, looking at this on the 15-minute time frame, the buy would have been valid here. the buy would have been valid here on the 15-minute time frame. And why? This is my type of play. Once I come to the chart and I see that price breaks and close above my level, this would have been my confirmation to actually take a buy. All right, but I think at this point it might be a bit too far. But just to show you guys again, you get a clean break and close above resistance. If you look at the time, it is, leading up to London Open. So there is a high probability that the market will continue to push price in your direction. So if you took a buy here, if you should take a buy here, all right, you have your stop below the current candle. In managing risk, if price close back in the range, you will have to close 50% of your position. That's the normal thing to do for me. All right. And take, for example, price starts to push. All right. We'll get a little lower wick here. Once the high get broken, it increases the probability the high got broken. This is the ideal play for me in the Forex market. This type of play, as well as the break and retest of the market structure. All right, so again, I am not going to change my trading strategy in the Forex market. I'm not going to change my trading strategy. So even if I get 10 loss back to back, which is highly unlikely, I'm not going to change my strategy. It's going to remain the same, and I am going to focus on using that strategy every single day. All right, that's the reason why I do simulation / back testing like these, because I use it in my session to, fine tune some minor errors, because here and there you might get losses and stuff like that. That's inevitable, but I just aim to keep my losses small. And once you can do that over a period of time, you are going to be profitable in the Forex market. So even if I am in the London session and I see this type of setup, I am going to trade my setup just the same, because this is my ideal play in the Forex market. This is the ideal play in the Forex market. This is the ideal play in the Forex market. All right, so again, once you come to the chart, whether it is the New York session, whether it is the London session, price breaks and close above your structure, you just have to look to the left to identify your most recent significant level. All right, and as you can see, we are pushing above this wick here, so it increases the probability for price to actually continue to push towards the upside. But it is merely impossible on the daily time frame to actually, trade on the daily time frame. I don't trade on the daily time frame. I just use it to identify key levels. And this is the daily time frame, and if you can look here, guys, we are currently breaking above this daily wick, and we have clean candles here to the left. So what does this mean? It increases the probability for the market to push price towards the upside. So this trading strategy is effective 110% for me. So even if I get a few losses, I am not worried about that, and I am not going to get emotional about, minor loss in the Forex market. I'm not going to get emotional about that, and that's what I am trying to get person to understand. When you are trading in the Forex market, you are only risking what you can afford to lose. So if you can't lose a $10, don't risk a $10. You're risking 1% of your account. You're okay with losing 1% of your account. Go ahead and risk your 1% and manage risk, because at the end of the day, if you manage risk good, risking 1%, you should lose less than 1% of your account. Like, you just can't go wrong with this. You just can't go wrong with this strategy, guys. I'm telling you straight up. You just can't go wrong with this strategy. And as you can see, price didn't even stop. We just continue to climb. So what I'm gonna do, I'm gonna actually look at the session. Yes, so we are in the 9:30 session. We have support here. I'm just gonna change what this color. We have support here. I know if price breaks structure again, it increases the probability for us to push down. Even though we are above this, minor resistance, what I am looking at also is that we came up 1, 2, 3, 4 times and we got rejected, So that's what I am looking at this moment. Yes, so fake out, close back in the range, All right, so seeing that price breaks and close below support, what this means is that we can push back down to this level. So if I should take a sell now, the session is about 10 leading up to London close at 11, and there's always volume in this session. All right, there's always volume in the session leading up to the London close. So even if I take a sell no, all right, in managing risk, once you don't close above this level, or if we start to break 140, 140 flat, then I might just close 50%. But seeing that a break below support, this increases the probability for us to push back down to this level. But I'm still paying attention to this wick here because it came down and got rejected, but we're still in high volume time. So the probability is there for us to push down. But if price starts to break here or pull back in the range, might just close 50% of the position. And I am glad that this time in the market is tough because I use this opportunity to demonstrate risk management so that you guys can actually understand the importance of risk management in the Forex market. So this is like 5. So I went up about 7 pips. So if it pulls back to my entry, I am going to close 50% of the position. So my entry was 139, 939, 939. So if it pulls back to my entry, I'm gonna close 50% of the position managing risk because the idea is for this candle to fill this wick and then continue to push down with momentum. All right, and at this point, what I am going to do is to move my stop loss to entry to make the trade risk free. All right, so I'm gonna move stop to break even, and I'm just gonna check to see how much pips in profit. So this is 12 pips in profit. All right, this is 12 pips in profit. So I think it is wise to secure at least 50% of your position and just leave a small position to run. Oh damn, we'll close everything. Damn. We'll close everything. But let's see if price will actually continue to push down. And as I can see, it didn't pull back to our entry. We push down. And look at that, guys. Look at this. You just can't go wrong. You just can't go wrong. So even if you get a few losses, don't get emotional about it. Full take profit would have hit right here because we took a sell here and price came all the way down. I just made a minor mistake where I actually closed the full position accidentally. But you cannot go wrong. So even if you are using this strategy in the Forex market and you get a few loss, don't lose sight of the bigger picture. Still risk your 1 to 2% or 1.5% or 0.5% and just focus on the bigger picture and just try and maintain consistency. So I'm pretty much glad this trading structure was pretty tough. For one, I demonstrate the importance of risk management and how to cut losses short. All right, and as you can see, we are just pushing towards the downside. Look at that. This is over 38 pips. You know, so this trade alone would have gave us over $200 after we secure 50% of the position right here. The rest of it, you know, would have made over $200 with this entire position if I didn't actually close it accidentally right here. You know, and as I can see, price even push down some more. You know, 45, 47 pips. You know, so I'm just gonna cut the simulation here, guys. You know, this was done to show you guys the importance of risk management, and also look at the higher time frame. Whenever you have the higher time frame pushing in a particular direction, you know, the lower time frame will actually farm price that way as well. So the higher the time frame, the stronger the confirmation. So even when you have your 4-hour candle closing above your 30-minute resistance and your 1-hour resistance, it increases the probability for price to continue to push bullish. You know, so always trust the higher time frame. Whenever the higher time frame is pushing in a particular direction, you know, work with the higher time frame. All right, so this is just like, you know, 0.52% basically. You know, if we didn't actually if we didn't close the entire position here accidentally, it would have been up probably about 2%. So I'm gonna cut the stream here and I'll catch you guys later.